Taking a look at shares of Lyft, they're now off just about 22% following the company's fourth quarter results. The company's first quarter revenue guidance coming in a bit light. That's a big reason why we're seeing shares fall here in extended trading. Revenue, though, for the fourth quarter up about 21%, 1.18 billion. Estimate on the street was for 1.16 billion. So just beating the street's estimates there. Pras Subramanian back on set here to take a deeper dive into this report. And Pras, just looking at the share reaction in extended trading, clearly lots of concerns about that guidance number.
I mean, there was concern that Lyft wouldn't match Uber's results, and they didn't. You note that revenue guidance light, $975 million versus $1.09 billion expected. There was talk that management was very conservative about their guidance, and they still missed the guidance, right? So missed it by a lot. So I think this is really hitting the stock. Looking at revenue up 21%, that's fine. Active riders in line with estimates. The loss, 74 cents loss compared to a small little adjusted expected gain. In contrast with Uber, right? Like revenue up almost 50% compared to a year ago. They expect operating income profitability this year at some point. So the businesses are just they're sort of similar, but they're being operated in a much different way. And Lyft focusing on the U.S., of course, they don't have the ancillary businesses like deliveries, like freight, like even rental cars, right? So I think this is the big issue for Lyft right now. And I think the call will be important is what are they going to do to are they going to see any kind of profitability coming in the second half of this year? How are they going to boost revenues? How are they going to expand the business? Are they going to get into other types of ancillary type logistics type of activities that Uber's done? Or, as someone once said to me, like, are they going to get bought by somebody and this be some other ancillary service for another company? So
you can't help but wonder if they're an acquisition target. Okay, it's not great. That stock fall does not represent the numbers I'm seeing here. Does it fit what you're seeing? That seems like a massive investor overreaction. We knew what Lyft was. We knew they were a largely U.S.-based company. We knew they didn't have the delivery, the eats. Is this the reaction you would expect from the report you just saw?
It just, I think again, it's a guidance, a revenue miss for Q1, and the fact that it was already conservative. Like analysts wanted just barely a little bit more than Q4, and they had less than Q4, right? They're not building not sequentially building revenue quarter to quarter. So I think the question is, are they able to sort of grow that and also keep profitability per user? I think that's what's kind of discouraging right now. I think that's why we're seeing, extended trading is light trading, but clearly the intention here is to sell the stock now. So I think that's what we're seeing in the aftermarket.
A flee from that stock right now. Pras Subramanian, as shares just continue to plummet.